Yeah, it's really important if you want to understand any market to look at the basic fundamentals of supply and demand. I was talking about this earlier this week with our team, and there's no better way to get just a bird's eye view of a real estate market than looking at the absorption rate, something you really don't see talked about too much in the press. However, it is something that's really looked at by economists and analysts who are trying to understand what's happening in the market. And the philosophical principle behind the absorption rate, and we talk about this on this channel ad nauseum, is it deals with the idea that if uh, you took everything that was on the market currently and nothing else came on the market at the current rate of sales, how long would it take everything on the market to sell through? So we do that by taking active listings and dividing that into transactions, which gives us the absorption rate. So we currently are at 4.36 months. Now that's all inventory types. And we know, and we've talked about this earlier today and ad nauseum on this channel, is that the condo side of the market is really, really weighing down these stats because there's just so much condo inventory sitting on the market. And so when you look at the overall market stats, you do have to take the numbers at a high level with a grain of salt. But if you look at the conventional wisdom between what 4.36 months represents, overall, that puts us in a balanced market conditions, which generally ranges between 4 to 6 months, and anything over 6 months is a buyer's market. Now, for frame of reference, the condo market is over 6 months, and the low rise market is under 4 months. So overall, we're balanced, but it really depends on what segment of the market you're really driving into if you want to get a sense of the absorption rate and how the market is performing overall. It's a really, really great stat, and it's something we focus on all the time. Now, to give a little bit of context to this number, 4.36 months, we'll give you a couple other statistics. At the height of the market, I would have believed end of 2021, early 2022, just before interest rates started going up, we were seeing an overall months of inventory at 3.87 months or something like that. It was actually, I think it might have been a little bit lower. We're just sitting at about 3 weeks. And so that's the normal type of Toronto real estate market, in between 3 weeks to 2 months. So everyone's just writing for the hills. Oh my gosh, we're at 4.36 months, or oh, we're at 7 months. But to look back at how other markets around the world are operating, to give an example, and this is something we talk about with our clients and amongst our team, is if you look at Manhattan, they're currently at 188 days of the market with an overall 7.8 months of inventory. That is really, really important to compare that to 37 days and 4.36 months. So relative to most other large markets around the world, I don't know where you're tuning in from if you're watching us today, and we'd love to hear down below. I love it when we hear from people all over the world watching this. But we're still at a very healthy pace relative to other markets, and having more balanced market conditions, I think, is actually really healthy overall, as long as we can keep it at a little bit more static and less erratic inventory levels.